Good day traders, my name is Justice and welcome to the channel. And today is the first day of us having our reviews, right? Our last 2 days reviews. And where is this coming from? It is from our season 3, right, of our Challenge X funded. If you don't know what that is on the channel, we have done our season 2 and season 1 whereby we trade live a funded account, well, a challenge account to a funded account, so that, and we do this live, right, so that I show the reality of trading, the challenges that you face, right, and the risk management, the psychology towards it as well. So if it's your first time, don't be shy, like, subscribe and share as well, and let's get into the video. So as you can see here, we took our first trade, right? We are on our chart. We are on our graph that we were actually showing live, right, on the channel. And we took, this was our first trade from here all the way to there, right? And we went out, and then we took another one from there to somewhere there, right? So by then, the daily target, I was done. I actually did take another one off screen. Here we go. So as you can see, for Monday, right, we took 2 trades. Well, 2 live on stream, and then 1 that was off stream, but I spoke about it on stream, right? And the first trade we took was this one from here to there, and then I attempted to take another trade from here going back down, but I got taken out like a number of times here trying to capture this trade here. And then we waited, and then we took another trade. This was for New York, right? So as you can see the time below, that is at 4:35, which is UCT time, right? New York time. UCT -4, which is New York time. And the first trade was from here going up there, right? So for us to understand this trade, right, we need to understand the high time frame. What was it saying to us, right? What was the story the high time frame was saying? And if we go to the 1 hour, my high time frame, it is the 4 hour and the 1 hour. Those are my high time frames. Remember, I am a day trader and also an intraday trader, so I'm not going to hold trades for more than the whole day, right? So cool. So you need to understand the high time frame, right? So we will go to this guy here, and then we'll be able to see a little bit more, right? With this one here, it will allow me to be able to share a bit more than you can see there. So we'll go to, that was gold, right? Fine. And we're going to Monday gold. So Monday, where were you? This is Monday. This is today. Okay, somewhere here. So we can take that away, and then we can now look at price action, right? So if you go to the 1 hour, what we were supposed to see and understand is we are at all times, right? All-time highs, right? We've been at all-time highs, or for the past, I don't know, for the past few weeks, we've been at all-time highs. In fact, if you go on the weekly time frame, let me just remove all of those drawings there. We've been at an all-time high with gold, right? So I'm not saying you should be on the weekly to look for this, but on the weekly time frame, us being on the all-time high, like being on all-time high, what does that help us with, right? It means that whatever setups that we get while we are holding an all-time high, we don't have price on the left side or on the right side to work with. What we do is we take price, we just take setups that are there, and we are not entitled, right? We don't have areas where we say price should move from here to there. No, we should just be taking what we are seeing and what the market is showing us, right? So sharp. So my high time frame is the 1 hour and the 4 hour, right? My 4 hour, again, we were at all time. We're just taking out a previous daily high, right? And then we went we are currently trading above that. So one of the things I do, you watch me do it on live, but I'm going to also explain it now here, is that I highlight my previous range, right? As in like my previous daily high and low, which starts from 18 o'clock, right? So from 18 o'clock, that is it there. And then we put the previous 18 o'clock, which was somewhere around there, right? So that's it there. And then our previous daily high is here. And then our previous daily low is right here, right? Sharp. So by then we already know that, okay, we are trading above our previous daily high or low, right? Which is, this is Friday, and this, we are talking about Monday today, right? We are focused on Monday right now. So having that in place allows us to be able to project and say, okay, if you're trading above, is price going to carry on just creating higher highs and lower low, higher highs and higher lows, right? So if we're able to distinguish that, it helps us a lot with being able to take what is ours and not look forward for price to keep on going and going, right? So on my 15 minutes time frame, I also then highlight my Asia, right? My Asia starts from 18 to midnight. My quarters, so this is my daily cycles, right? Quarterly theory. And then we get to now know, oh, okay, we are also trading above our Asian session. So we are trading above our London, our previous daily high, and as well above our Asian session, right? So, which is good. On this very time frame, we can see we've got structure, right? We've got structure. And what is our structure? From the break here, we retested there. This is a trade I would have been part of if I was trading London, Asia, right? This is Asia. I would have been part of this trade. But again, by the time we wake up or by the time we arrive at the market, price is already pushing up, right? So we can see, what does it do? It then goes up and breaks that high there, right? Our Asian high. So by us breaking our Asian high, what this helps us with is we can anticipate a similar thing whereby, look at this, we broke our previous daily high, we retested into it, we've got this fair value gap here, we went up and took out that high. Now look, the exact same thing is repeating, right? This whole big thing happening here, where we've got our previous daily high and then we break it and we take price, retrace inside that area and retest them, is also happening here, right? If you take note, we break here, that is something we can also anticipate, right? So by the time we wake up in London, you see price break as well, so we can expect a retracement, and inside that retracement we've got this fair value gap right here, right? That's the 15. The 1 hour also did have a fair value gap, if I'm correct. Let's see. Oh, we didn't have a fair value gap, but we were rebalancing, right? We are rebalancing our previous candle as well. So we have a rebalance there, and with the objective of price now going to target the high here. That was the objective of price, right? So look at that repetition. You have it there, and you're also having a similar repetition take place here, where we break our previous session, we break and we retest here. That's where we're expecting our retracement. So meaning the best time to be part of this trade would have been at the bottom here, right? And if on the 15 minutes we are able to see that's our fair value gap, we now go on the 5 minutes time frame, right? And then from the 5 minutes time frame, we look forward to some sort of sweep of liquidity, right? If it's internal, if it's external, does not matter. Well, in fact, it's actually internal in this case, because I've got two strategies of being able just to trade the high time frame and also being able to trade the all-time highs when prices at like all-time high, and then I also have another one when we are inside, right? So what do we see here? We've got price sweep, price sweep there. That's our internal liquidity that we have there, right? So if we go back on the 15 minutes here, right, where is our fair value gap high? Our fair value gap high, and what does that mean? What makes a fair value gap? It's 3 candles, right? We've got 1, 2, and then 3. That's what makes this fair value gap. That's number 1. Number 2, we've got a retest here. We're coming back to this level, right? That's another factor of confluence. Another one is now, if you do look at the structure that was forming in here, right? If we take our Fibonacci, we place our swing low here, our swing high here, price between this swing low and this swing high, we are not in our 50, we are not, in our discount, right? This means that this high is incorrect. The high that we should be considering is the high that was responsible for breaking this high, even though it may be internal, right? So if you look, this guy here, what did price do? It's the one, but is it the really last high that we really had to go break there? No, right? What about this guy here? You went up. We also had another one, which is this one after we broke the structure there. But again, what makes a structure, right? It's the amount of candles that are there, right? This here, for me, I don't consider this a structure unless if I'm trading the lower time frame and my high time frame is now the 15 minutes. I think it makes sense what I'm trying to refer to there. So that is our structure where we've got a good thing. We can see we are coming to our 50. That is already enough, right? Considering what is at our 50, our PDR is at our 50. That's fine. So we've got that there. And then back to the 5 minutes, right? I was explaining what makes a fair value gap. Hey, there's a lot of things I'm saying here, and a lot of gems I'm saying, which you should be able to pick up. 3 candles, so 1, 2, 3. For me, for a fair value gap to be violated, right, we need to have traded below our gap that is the first candle or the second candle if it's holding the high, so which is this one here. That is it there, that right. If this one was longer, then we'll be putting it right there. So meaning by the time price like trades below this area, I'm not considering my fair value gap invalid, or yeah, if we trade up, we are now trading off something else other than what we are looking at, right? So meaning, why am I highlighting this? I'm highlighting this for important. On the 5 minutes, then I look for my sweep. That's my sweep. That's my sweep there, and then this is my my low, and I'm trading the fair value gap. I'm not just the fair value gap itself, I'm trading a retracement. That's 2. I'm also trading this retest, which is 3, right? So already our factors of confluence are good and they've got a value, right? And on a lower time frame, we're seeing we've got a sweep of liquidity. If I didn't have a sweep of liquidity, I would not be getting in this trade, right? So then our entry is from there. I do have other confirmations, but directly for the purpose of this video, that's an entry there with our target there, which is a nice 3.9R, close to a 4R, right? And one of the things I'm going to mention, this is one of them I'm mentioning. If the second candle is higher than the first candle, I'll put my stop loss right at this one. But for safety purposes, I'm just putting it here, right, for this purpose of this video, right? So that is the entry that we have there. And then look, price gets in there, it goes. But we were not part of this move. We're not part of this trade. We were actually not part of this trade. This is the trade that we were not part of, right? We were not inside this trade. The one we were part of now is the retracement. So price not breaking this high tells me a story. It not breaking this high, it means that there is still strength that we've left below that we need to go collect, or we were not able to gather, right? So if you are able to see what we have here, price plays on, it plays on and then it goes and breaks this area here. Sorry, I'm saying it breaks. So it retraces and then it breaks. But now I want to go back to my focus here, where we were. If you look at our structure, that's it. That is it there. We went low. All right. Who breaks the high there? It's him there. So we go there we come back down. Who breaks that high there? It's him there. He goes there. Then we've got this high to break and that high to break there, right? So then who is our current protected low, right? Our safety low. It is this guy here, because he's the one who is taking this. Hence I use other time frames like 2 minutes, all right, where you can be able to see a bit more structure. So we broke structure here, we came back and retraced there. Where were we retracing into? I had an order block right over there. That price before this down close candle I have inside here. Price before we so we went up, we took our structure. Then I'm trying to say much without saying a lot, right? So we then broke structure, then we are retracing. Order block not traded into. And what makes this order block for me valid? It is this internal structure that I have there. That's what makes this order block internal. So that makes this order block valid for me. So I didn't get in here when price came here, but this is where my entry is supposed to be, right there. By the time we break here, and then by my order block there, my stop loss right over there, targeting back up here, right, as you can see. And then, but I was not able to get in there. I was anticipating price to come back, right? I was anticipating price to come back. That's when it pulled back, then I got in here, right? This is the candle where I got in here, exactly this candle. Then we go back up with my stop loss, okay. And then we go and take out this high and that other high there, that was the target. So retesting, remember back this area here, it was about a 6 or 7 hour on stream. So that is it there. And let me re-show you the trade itself. This is it here. If you go back on the 5 minutes, you'll be able to see. So this do you see the candle which I got in right above? You see where it's showing you there. Then we're able to hit our take profit. So that's how we're able to get in the first trade. If you go back and backtest what I showed and I explained there, you'll be able to see a lot. You'll be able to find a lot from this trade, and as well with the things that you already know that works, right? Which maybe I did not mention here, or maybe I did not mention them because I actually don't use them, right? So that is that. And then the second trade, which was this one here, right? This one, which was here to drop. In fact, I ended up going out here, but I was expecting price to go take out this internal liquidity here. That's what I was expecting, to take out price internal liquidity here. I'm seeing a repetition of almost the same thing, which the reason why I got in there to go back up again there. So, but then I went out sooner because I already had reached my daily target, right? So that's why I was able to do that there. And let me explain that trade now. Back with the analysis where we are. Not you, where you, yeah, cool. So now note, and this is New York now. Again, you'll be able to see this, a repetition of all of these things, right? This is New York. So we'll go back to the 5 minutes, or even 15s, okay? Note, our Asian high was that one. Our London high is this guy here. Well, let's play enough price for that to happen. That's our high there, which was this here. And remember, we had all-time highs here, right? So we broke this structure. That's the one we hit our target, and then our London high is this one, which is our Q2 there, right? So price doing this here was enough for me to say, okay, I want price to break this structure, and we potentially get a retracement again into the area so we can go back up, right? The same thing I just showed you from the high time frame here. I showed you right. Which is the high time frame? This one here. Sorry. Yeah, this one here, the big guy, and then the small guy there, and then also I was expecting it here to take place here for it to come up. So One of the things which I was not happy about this is that I didn't have internal structure for this to take place. I had my fair value gap here, but if I go on the lower time frame on the 1 minute here, my structure was there, but it wasn't the way I would have expected it to be, right? So from here, that's the structure we're talking about. Exactly the same thing we're talking about there, right? Structure that we break here, and the high time frame, fair value gap, right? Here's the fair value gap low, fair value gap low, of course, so 1, 2, 3, so it's gonna be here. And then same thing. I've just revealed the strategy here. You could get in there, stop loss there, target that, open a 3R, right? And if you are able to use your what do you call it, if you are able to use if you see when I trade, I've got a thing where I call it an 80%, right, which is my mechanical discretionary, which is if my trade is, for example, let's say a 10R, at 8R I should be able to manage my trade by being able to, that's where the discretionary part comes in. Before that, everything else was supposed to be mechanical in order for me to get in the trade. And then once the trade gets to an 8R, that's where I get involved, right? That's where I get involved. My discretionary part, but there's only two options which I have. The first one is when it's at 80%, I can totally close the trade, or I can choose to put the trade above break even so that that trade does not become a losing trade. So this is a good trade. It's not bad compared to everything else we've been talking about there. I'm also speeding it up because we've got structure, high and lows. That's our structures there. I see the video is becoming too long, and this is just on Monday. I haven't even done Tuesday's one. So slow, high there, and also we come by the 50. Let me show you that it repeats, the market repeats everything it does, it repeats. You see, just by our 50 there. So we come in, and the objective is to go up. So with this trade, it's already enough for me to be in and be out. I was going to be able to take my 80%. I was going to be probably somewhere here, and I would have been happy to take my trade, right? But I was not part of that. What I was part of is I was not expecting price to go and take out the high, only for the reason of it having to come and take out this low from the high time frame. This is whereby you should not get caught up. If you're able to understand the purpose of your high time frame and your low time frame, you should not get caught up in price on the lower time frame. Lower time frames, they've got purposes. You saw why I'm going on the lower time frame, to look for maybe an internal sweep of some sort, right? That's the reason why I'll be going on the lower time frame. But for you, you should make sure that you don't get caught up. And I was having my high time frame in mind, that okay, on the high time frame, price is actually saying we still need to retrace and go take out our internal liquidity, which is, well, in this purpose, the high time frame was now the 5. Is to take out this liquidity here so that we can actually then go up. That was the whole purpose of it. Take out the liquidity and go up, and which is the liquidity of this time frame. So I was expecting it not to complete, as in price not to go take out the high there, and that's why I was now a bit skeptical about entering this trade. So if I was trading reactions, I could get in a reaction, price does well, I'm good, I'm happy, right? But this was not a reaction. Yeah, it was a very good trade actually to be part of. So then when price did that, it went up and failed, and we also have an order block here, a nice clean order block there. Sorry, there. Price came in, and then also on the high time frame, in the 5 minutes, was it 5 minutes or 2 minutes? When I say high time frame, you don't understand what I mean, right? I mean the time frame higher than the time frame I'm on. That's what I mean when I'm saying high time frame. We also had a fair value gap that we had here, which is not traded into. So we came into the fair value gap order block, and then we had our market structure shift there. So we can, if you look here, we had a small sweep here, and then our break there. After we had our break, retraced it into the fair value gap, the nearest fair value gap that we had there. That's where I actually got in, exactly there. I even went in on the lower time frame and I got in from there, but yeah, there. Then my target, remember now, because I know we are coming back, is to the bottom there. But again, look at that. That's a 14R. In fact, to that high there, it's a 7R. That's how I was able to get involved in this trade. But I went out sooner. And let me show you it here, exactly where we are here. I'll go on the 1 minute so you can see. Transition to urge. Let's go to the 1 minute. Then you see what I'm looking at here. Okay, for the purpose of this video, guys, I will just do this here, and then I'll make another. In fact, this is the first video, guys, right? We are doing this together. It's the first video of reviews. I will have you go watch why I got in. Go watch my second stream, right? Then the one I released on Friday, I will improve at explaining faster, and as well, I don't know, if you like the videos long, let me know, comment, let me know, right? Then I'll make them long, and then I'll make them long. So back to the 1 minute. You see where I got in? Present. Well, this is on this account, but on my account I actually got in on the high, just a little bit the candle before that. But that's exactly, see, by the time it got there, I was already out. Why was I out? Because I already reached my daily target as well. So guys, with this video, I was able to share a lot, and sorry for the sound behind. I'm at home, all right. I've got my daughter, I've got my wife, we're in the same space, so there will be sounds here and there, but take the time to actually see. Look at this, my precision at this candle. Even was the candle, the last candle went out there, went in there, went out there. So drawdown, I hardly do see drawdown. All right, and I'm fascinated with reversals. I'm fascinated with that, or reversal areas, points and areas and stuff. But anyway, yeah, this is our first video. Of course, it will be crusty, but make sure that you like, share, and subscribe, so that you give the encouragement to also have me improve on the videos and do better, right? And we are almost there, right? In fact, I'm not going to tell you where we are. Go watch the stream, then you'll be able to tell where we are. The one I recorded yesterday on the Tuesday stream. But we are almost there. We're about to pass, and we're doing this live. We are doing this live. You are watching each and every trade you're trading, and I also show you my P&L at the bottom there, so you'll be able to actually see my wins, my losses. I am trying to be as realistic as possible in this, to show about in trading, right? To show how this career and this industry is, right? So yeah, that's what we got, and thank you for watching this video. If you've got this far, put a money emoji or something, or even that arm emoji. Yeah, right. And thank you for watching again, and remember, it's only gonna get better.